So it's been over a year since China and the U.S. have been going at each other over trade, and latest data shows that the trade war had been hurting both countries' economies. Our Kim Hye-sung explains.
China's three major electronics goods have seen production fall amid the prolonged U.S.-China trade war. According to the Korea Electronics Association, China's color TV, semiconductors, and smartphone production fell on-year for the month of June. Color TV production fell near 2% on-year and 11% on-month to 14 million units in June. It's the first time in about 2 years that production posted on-year negative growth. The report said China's domestic demand has entered a mature stage and the ongoing U.S.-China trade spat hurt the global trade environment, driving down China's exports. Smartphone production also fell 0.6% on-year to around 150 million units. Semiconductor production also dropped to less than 15 billion units on sluggish global demand for chips. Auto production and robots production also nosedived by double digits. The ongoing trade war is also weighing on the U.S. economy. The U.S. Congressional Budget Office said Wednesday local time the budget deficit is set to hit over $1 trillion by fiscal year 2020, 2 years earlier than previously estimated. The CBO said federal debt is rising faster than expected due to increased federal spending and growing per capita healthcare spending. It also singled out tariffs as hurting the U.S. economy as they raise prices, curb investment, and increase costs for businesses. The CBO said as a result of tariffs imposed by the U.S. and others since last year, U.S. GDP would be 0.3% lower by 2020 than it would have been otherwise, and real average household income will be reduced by $550. Since last year, the U.S. and China have already exchanged tariffs on over $360 billion of goods. Trump's new tariffs on another $300 billion of Chinese imports, including a range of consumer goods, will kick in later this year. Kim Hye-sung, Arirang News.